Well, good morning, winners. Can you guys hear me okay? I want to get that out of the way quickly. Go to my question screen here. Loud and clear. Good morning. Hear you well. Fabulous, fabulous. I've got Seth and Vance on standby here, so we'll be bringing them in just a minute. But you guys should be, let me just see what I'm sharing with you here, make sure I got everything the right way. You should be looking at a cover of a digital book that says Becoming Your Own Banker, 5th edition by Mr. Nelson Nash. That is going to be our topic today. Again, we introduced this in the boot camp to you guys. I kind of really structured the entire boot camp around this idea. And before I bring these guys on, I want to give you guys just a real quick, like seriously, the Reader's Digest version, real quick, rough overview of Becoming Your Own Banker, how it came about, and then I want to introduce Seth and Vance to you. So I'm clicking along doing one-on-ones, and one day I end up on the phone with Seth, and Seth is over in the west side of the United States. And Seth is one of those people who he has a long background in strategic planning, acquisition and dispositions, asset protection, risk mitigation. I mean, the list goes on and on. He did contract negotiation, project management. I know at one time he was kind of managing an entire law firm. He did litigation management, mediation, and alternative dispute resolution. So he kind of goes back a piece in what he's been doing in the law arena. And now I think a lot of his focus is on asset protection, risk management. He does a lot of real estate acquisitions and dispositions, but his primary focus today is what we're going to be talking about right now. So anyway, we'll bring him and Vance on in just a minute. I'll tell you a little bit about Vance before I do that. But here Seth and I were on a one-on-one talking about his crypto portfolio. And from that, we sparked a growing friendship, one that I value a lot today, more so than some of the ones I've had 20 years. And, he's been able to impart quite a bit into my life as well, just the same way I was doing for him in crypto. And he's not just a friend, but someone I can call on who has that piece of paper hanging on the wall that's so hard to get for so many, especially over on the West Coast. It's pretty prestigious to have that on the West Coast. But anyway, so he started talking to me about a product called IBC, Infinity Banking Concept. Well, the IBC was something I was just vaguely familiar with from my past. And out of my past, I had this actual book you're looking at on your screen. I had it sitting on my coffee table for multiple years. And, I never actually got past probably the first chapter or two. And then later on, after so many years of this book sitting around, I think I threw it out. So as soon as he talked about it, I was like, oh, wait a minute, I think I've heard of this. And, a little time went by and I talked with John Jay about it a little bit. And I said, I think we should really be exploring this because I think this is exactly what's needed for people that are in crypto. So let me jump into that portion and go a little faster. So in crypto, guys, you have 100,000 in the market, you have 50,000, you have 500,000, you have 1 million, you have 6 million. And all of a sudden the market expands. And over a 12 to 18 month period, you end up with a 20, 30x on your money. And even at $100,000, you're staring at 3 million bucks. And for people that have 100,000 in the market, $3 million might be the biggest number you've ever looked at. So the reason that I thought this would be great, in particular for this team, was because we do have a large number of people here with a large amount of money into the markets. And so I think what we're going to see here is we're going to see an awful lot of multi-millionaires produced out of this next expansion in crypto and beyond. And when you can make 2,000-3,000% on your money, now what are you looking for after that? If you're me, here's what you're looking for. You're looking for safety. So in other words, I don't want to have to put my money somewhere where a bank can bail in on me. So you're looking for safety. You're looking for the ability to use your money at will whenever you want to. You don't want to have to go to a bank, for example, and say, "Hey, can I get access to my money?" I want to wire some money to Australia, and they read you the riot act about your money. You just want to be able to make decisions with your money. You're looking for privacy. My goodness, the ability to do this private. Wait till Vance talks to you about something called an islet, and he'll go through that. I'll leave that to him. But that's going to become a very important part for many people here, including myself. And then, there are other attributes as well, but how about the ability to have your money growing, whether you're using it or not? So what do you mean by that? Well, you can create your own bank through this process. And when you want to take your money and go over here and make an investment that has, let's say, a 20% yield on it, and maybe it's something you can do over the course of 6 months, a year, 18 months, your money is still, it's still accounted for in your account, and it's still over here growing at a certain percentage, guaranteed. And I'm going to use that word guaranteed a lot today, which is something I never do because, we've all heard the saying, the only thing that's guaranteed in life is death and taxes. But let me tell you, we're going to add a third thing to that, and it's the IBC process. It's guaranteed. And when you see the amount of help you can get from these guys, and, I'm going to talk to you in a minute about Vance. I mean, Vance actually mentored with Nelson Nash for right at 2 decades, in addition to everything else he did, which we'll go through as well. But anyway, the ability to bring all that together in one package, here's how I'm using IBC. So you guys know I'm a big crypto holder. I'm not bashful about that. I'm not bragging about that. It's just the way it is. I put my full intention on crypto when I learned about it, and I jumped in with all feet, all arms, the whole body, everything. I went for the plunge. I did not hold back. I'm a risk taker. I've seen this kind of opportunity in my life before, and I did the exact same thing then. I went all in. And so for me, the ability to, as crypto expands and I'm staring at 50, 60, 80, $100 million, I want multiple streams where I can put 10, 15, 20% of my windfall over into something that's still growing. It still has the ability to grow passively every month. It's not on the banking platform. It's on a platform that cannot be bailed in on, that has a 200-year has a 200-year history. Even before the IRS tax code was written, these things were around. And so that's what I want. I want a platform like that. And so this was the very first one that, I found. Really, I mean, it found me. Seth just said, "Hey man, you really should be looking at this. I mean, I'm following along in crypto here, and this is phenomenal, and this should be for everybody." And he shared with me some downfall he'd had in his life, and had he had some things set up in IBC, it would have never happened. So before I go through a couple of Vance's accolades here and turn this over to these guys, I want to just give you guys just a couple of quick examples. In 2006, for 9 years, Wells Fargo increased, through this private asset that we're going to talk about today, they increased their holdings of $3.4 billion to $18 billion. So what we're showing you here today is not pie in the sky. It's not, just something anybody can know how to do. I mean, seriously, I've vetted this thing every which way you can vet it. And Seth will tell you about that, because I wanted to be sure this was something to bring to you guys. So I am fully involved here. I am on the next expansion. I'll go ahead and tell you, I've been talking with Seth and Vance, like my first big IBC that I want to do, the first big one from crypto gains. I'm going to be putting in somewhere around $5 million, and then that'll be ongoing. So that's just my first big one. Okay, so I'm making plans to to get 20–25% of my windfall money right here into IBC. Companies like General Electric were the first current era big business to implement such a strategy. Walmart followed suit. I mean, but see, most people don't realize that this is available, for example, to just you and I. And that's what this whole Saturday live stream is about, an extension from the boot camp. And this is going to be an ongoing extension because there's a lot to learn here. When you start talking asset protection, you know, there are different laws that apply to different states. And that's where Seth comes in, okay? There are different, you can do one thing over in this arena of the world with an IBC, and over in this part of the world, you can do something different. And so that's why these guys make such a duo team together, you know, for this particular product. So I can't say enough good things about it. I'm just giving you the Reader's Digest version. I'll let these guys hone in on a couple of other really important points that they find today. And then they're going to also expand on things we talked about the first time. Let me see here. Let me get to right here. So guys, who I'm introducing to you today is Seth Hicks. I've kind of just went through all of his accolades. His partner is Vance Lowe. These guys tag team back and forth between Texas and the West Coast. Vance is 40 years in the financial industry. You'll be able to hear the wisdom as he talks. You'll hear it come through. The first time I talked to him, I said, man, this guy knows some stuff. And of course, when I got a chance to go spend a couple of days with him, I just kept my mouth shut for the most part and listened and asked lots of questions. He has an extensive knowledge in the financial arena. He not only built up his own office over a couple of decades, but when he finally kind of came around to the IBC concept through his friend Nelson Nash, and he realized, wow, everything I've been doing, I've kind of been unknowingly giving my clients bad advice. Let's just say it like that. Maybe bad advice is too strong a word, but anyway, he decided right then and there, he said, I'm closing this down. I'm going to reopen my business under the IBC. I'm going to go convert all my clients and get them into something that's really, truly as powerful as I've been talking to you about already for the last 15 minutes. And he did that. And today he's the CEO of Private Banking Strategies. Not only that, he's my friend and has become my friend. And I value every bit of the conversations we have, the time we get to share, the questions he can answer. And you're talking about a guy here who served on the board over at Nelson Nash Institute. I don't believe he's still there now, but he was serving on the board for many years. You know, Nelson Nash passed on last year, and Nelson was one of his mentors. So we truly have the best. There's other people out there doing IBC, okay? Don't make any mistake about it. There's all kinds of ways you can skin a horse. And but anyway, he is one of the best, and I feel grateful to have him here with Seth. And at this point, let me just introduce you guys to Seth Hicks and Vance Lowe. Are you guys with us?
Yeah, thank you, Jay.
Thank you very much, Dave.
Fabulous.
Really
Thank you guys for being here early. I know it's super early for Seth, and it's early for you too, Vance. So thank you guys for being here.
Yeah.
And thank you,
Jay.
This is I've been trying to get these guys back on the line again for the last couple of months, and they have been overrun busy with folks from the crypto space who are making their plans that the moment they get their windfalls, they can come right into the IBC program, as have I. And I want to just tell you guys right up front, before Vance and Seth talk to you, I made an agreement with these guys. I said, listen, every single person in crypto needs to know about this product. Every single person. People I don't even know, I don't even care to know. But if you're in crypto, you need to know about this product, because there's a whole lot of people in crypto that are going to have a sudden windfall. And when that sudden windfall comes, if they don't have a plan, if they don't have some privacy, if they don't have some safety, that sudden windfall is liable to come and go as fast as it came, maybe even faster than it came, depending on when you got involved in the crypto, right? So maybe it even goes faster than it came. But the point is that I told him, I said, I have some people that I care about that are going to want to share this. So, for example, guys, upcoming in the very near future, we are planning to share this with a couple other very big crypto groups, much bigger than this group. What you don't want to do is you don't want to be that person who is sitting around going, well, I hadn't had a crypto windfall yet, so I'll call these guys when it happens. And then they say, well, yeah, we're going to have to put you on a waiting list. We'll get to you in about, I don't know, 6 months. That you don't want that to happen because there's a couple few thousand people in front of you. So all I'm telling you is, once again, level 5 is the way I look at it. I'll put you guys first. Some of you already took the initial steps, not nearly the number I think should have taken their initial steps from spending, over $1,000 in a boot camp to find out about this. But you guys need to take those steps, make your introduction with these guys, have a conversation, fill out their financial form, let them look at where you think you're going to be, and do that before this goes out. And like I said, in the very near future, this is going out to a few thousand people in crypto. There are some people who have groups just like this one that are private groups. I have one friend of mine, he has 2,700 people in his private group. And he can't wait to get his hands on Seth and Vance. And I keep holding him at bay because I want you guys to have that opportunity to get rolling ahead of the big numbers, okay? So make sure you're doing that, guys. Seth, Vance, thank you for being here. And I'm going to turn the floor over to you guys. Seth, if you want to, you can kind of crank it out. I know you've kind of put together a bit of a sheet here on what we want to cover today. So if you want to just crank it off, go ahead, my friend.
Sure. Thank you so much, Jay, for the generous introduction, and super glad to be here with you and Vance this morning. There's 7 pillars and features of private banking strategies that I want to lay out for the audience, and I'm going to do that rather quickly. And if you're taking notes, go ahead and write these things down, and you can begin to ask questions as they permeate your mind in our discussion, and you can drop them in the Q&A at the end. One of the primary motivators for me when I discovered private banking strategies and the infinite banking concept was to maintain privacy and protect my assets. Okay, and that necessarily dovetails with government intrusion and taxation. I wanted to keep my affairs private. I wanted to protect my assets. I had made millions of dollars, and in certain years I had lost millions of dollars, unfortunately. And I had been involved not only as the litigator in hundreds of litigation matters, but had been in my own litigation, in real estate development, in various matters, many of them simply because you're doing business. For example, on real estate, you have nuisance value plaintiffs that want to try to shake you down, a tenant or a slip and fall, something like that, just for the money. Well, asset protection and privacy effectively prevent those type of nuisances, but more importantly, they really protect the corpus of your estate. When I discovered the infinite banking concept, it hit me like a ton of bricks, because I thought that I actually had it all structured very well, and that I probably couldn't learn anything new that I wasn't already doing. And I was certainly wrong. So when the light bulb came on, I jumped in to the banking concept and all of its value that it provides wholeheartedly, just like you jumped into crypto. And we have immersed ourselves in the structure of creating entities and private banks that are private, asset protected, grow tax free, and can be transferred to their heirs tax free, create the velocity of money, which banks utilize to multiply and leverage their money. It has guaranteed growth. It can never go backwards. It's compounding annual growth year upon year. You can pull your cash value out of your private bank anytime you want, and you can structure those loans in any fashion you want. You'll never go through a foreclosure or a repossession or be unable to obtain a modification of your loan terms. Some of you, this makes sense because our audience is some of it's already started taking steps to do these things, and some of them it may be a little bit foreign, but you can ask your questions in the Q&A. And then finally, the seventh pillar is legacy value. I'm creating a legacy for my children, my grandchildren, and my great-grandchildren, and the type of revenues that are coming through our family gateway require significant planning and structure. I don't want the federal government or state government from wherever I live taking any of my hard-earned assets that I've earned over a lifetime. I mean, we've already paid taxes. We pay every sort of tax you can pay. We pay sales tax. We pay, you pay sales tax on a car every time you sell it. They can make more sales tax than the value of the car. That's absurd to me. So the taxation is all a common interest of ours, or we probably wouldn't be on the call. And if we're working hard to create multi-million-dollar estates, we don't want the government taking those. And we have structure that can effectively protect that entire legacy estate. So those are the 7 pillars. That was some of my primary motivation to implement it myself. And then I realized that this is actually worthy of a real focus, a real career focus, a real value focus in being able to help other people establish something that I'm very passionate and committed to, and that's privacy, patriotism, and the American way and dream that we all believe in. Particularly with the cryptocurrency investment asset class, we have a proprietary system that Vance and I have created with Jay, which effectively keeps your transactions private without limitation. You can buy and sell an off-ramp, as many of you know, with channels that Jay has created without limitation and without any reporting. So those transactions can occur and effectively capitalize your private bank entirely off the radar. And what you choose to do with your tax strategies is your business. I'm not offering you tax advice, neither is Vance and neither is Jay. Your risk and reward balance with regard to taxes is something you have to develop yourself and be comfortable with that. But I know that there's many of you in the audience who believe that taxes are unconstitutional, the Federal Reserve is unconstitutional, the IRS is unconstitutional, and that we don't owe taxes. And I can certainly argue that same paradigm. But there's others of you who are not so convinced or understood or learned or whatever the case may be, and you don't want to take those steps. This is a way that we don't have that intrusion regardless in our private bank. It's not reportable to the IRS. It's not there's nothing going on, money in and money out, that's a reportable event. So I threw a lot out there. Some of that may be totally foreign to the audience because it's the first time they're hearing this, but those are the 7 pillars and motivations, and we can drill down and dig into more of what that means. But I'm going to hand off to Vance and let him lay a little foundation for our next phase.
Well, thank you very much, and I appreciate the introduction. You know, every time I get involved with this, I get goosebumps, for heaven's sakes. I'm very passionate about what we do because we found something where we, the individual and client, always wins. So I'd like to maybe start off with explaining what in the heck is IBC. First of all, please understand, and you might want to write this down, it is not a product. It is a strategy. It is a system. It is a missing education that we need to implement in our lives to get what we call a closed loop or a closed circle, just like the banks. Now you're looking at the book and it says becoming your own banker, not becoming your own bank, but becoming your own banker. This is the banker's mentality that we want to discuss. And we're actually going to share illustrations of that with you today. So one of the things, this little journey that you want to go down, and I want to thank Jay and each and every one of you. And oh, by the way, we already have several of you listening today have already called in, already signed up, because I guess Jay scared you a little bit on the volume of people that are coming in, and he is just absolutely correct. This thing snowballs so fast. But what is unique, and the reason I want to thank him and you, is you're very well organized, you're very well motivated to try to solve issues that have been perplexing in the past. So if we set up a concept like this and we teach you how to do that, let me give you a little bit of a journey here. We're going, our first initial call will lay everything out to the expectations, what we expect to do. And one of those things that we want to try to do, and we can do very efficiently, we can take anyone's situation where they're at today, using your own numbers, showing you how you can get set up and learn the strategy and effectively implement it. We all know we work really hard with our cash. We all know that the banks always get the money back. No matter what happens, we spend the money, goes back to the banking system. Now, it doesn't matter where in the world we are. It doesn't matter what currency we're using. It all flows back to the big bank. That's explained here in the book. You'll find also that the book will become the Bible of you learning and advancing in IBC. Crypto, just like you're learning there, there's so much you can learn and you can know and you can do. And it's not something that you can sign up for and put your credits in or money in and be instantly a professional at it. Jay's absolutely amazing at the knowledge he has there. So, anyway, let's continue. We want to do two things. What we discovered from the first round is that most of you were in crypto through 2017. And a lot of you will agree that we watched crypto go up and up and up. And then we watched it go down and down and down and down, and without taking profits. And so I've been asking the question, did you enjoy the ride? Now, I hope we're laughing or crying or whatever else. And I think there's a phenomenon there that I've been dealing with clients for decades. And that is, we're not prepared emotionally to take profits off the table. And that's one reason, again, we're teaming up so that we can actually capitalize. We actually know what we're going to do, how we're going to do it. We will not avoid the same, I call it a freeze up, because, it's happening, it's here. What do I do? We're going to have an actual trigger point and key that you'll go, oh, okay, oh, I do have a plan. This is what I'm supposed to do, and I'm going to go ahead and get it done. And so we've developed kind of a combination here. We're going to talk to you about two different strategies that you can learn about and you can implement. One is your safe strategy. It's the way you are today. It's your life, it's your lifestyle now. The thing about infinite banking is you don't have to change that. Not at all. We just change our thinking a little bit and start implementing and set up a closed loop mini economy or circle, we're going to call it. And we can start using the same dollars over and over and over again. Every single claim that's in the book that Jay's talked about, that Seth has talked about, we can back those claims up with the proof. We've got a real problem with the real banks because every time a dollar goes into the banks, they do what's called factoring, and they turn $1 into $6 or even $10, and they lend out, up to 90% of the money they actually have out of thin air. And that's what causes the inflation and the insolvency of banks. I still am on the national board of the NNI, and I just came back from a conference there, and I took one of my clients who works for the Federal Reserve, and his job is actually auditing and closing banks because they're insolvent. But he loves the IBC concept, and I brought him specifically to have him explain exactly how he's doing what I'm trying to teach the practitioners to do. So there's the safe plan that we're talking about, and then on top of that, we want to build the windfall strategy. And so there's a lot of things to do. It's not complicated. If you guys will get this book and you will read it, it will tell you what to do and how to do it. You just might not be prepared for it. We're going to outline it for you. We're going to have some discussions with you. We're going to show you exactly what to do. We'll give you some homework. We'll see if you get that homework done. And we're going to set up a safe strategy for you if that's the way you want to go. And we're going to build this windfall so that when it happens, we can step in and immediately start filling our own personal banks and banking systems up so that you can capitalize on that. So I know there's going to be a lot of questions out there. We're going to be ready for that. So Jay, I think I could talk all day long, but I don't want to. I don't want to do that. So
I'd like to address a couple things that I heard in that discussion, if I could, Jay. But I'll follow you if you have something you want to interject.
No, man, rock and roll.
Okay. So one of the very valuable feedback points that we've had from numerous clients is with regards to the book that Vance and I published. We weren't trying to recreate what Nelson Nash did in his book. We were trying to give a different paradigm and perspective that incorporated both of our expertises and was actually a little more simple to understand. And that's the feedback we've gotten. Your book is very easy to understand. I didn't get Nelson's book completely until I read it the seventh time, and I'd already read your book. So my suggestion would be that actually the book's free for the people on this call, and for the people that want to do walk down this road with us, you can get our book after the call. Jay, I can make it available to you, and you can publish it to them however you like, and also get Nelson's book. Okay, but I think that we're going to find that the majority of the audience would be better valued reading our book first. It might take an hour for fast readers. It's easy to read, and you can probably attest to that, Jay. And then go into.
I want to second that, Seth. I've read both a couple times, and I loved the book you guys put together. Loved it.
Thank you.
My wife did too. My wife read both, and she said, "My goodness, this book is 10 times head and shoulders above the first one. Why didn't you give me this one first?" And I said, "I'm sorry, honey."
Yeah, that's what you got to do to keep your wife happy. Just say, "I'm sorry, I'll get it right next time, honey."
Mm-hmm.
But that's the truth. Our book's easier to read, easier to understand and digest. It's like an appetizer before, a big steak. And Nelson's book is obviously a very foundational tool at implementing private banking strategies and the infinite banking concept. So that's one thing I wanted to say. Book's free for everybody on the call. Get it from us, please. And if this is something that you're, absolutely certain you want to do, get your 8-year analysis as soon as you can, because our calendar's full and it's going to get even fuller. And part of our expansion and growth right now is is training and sourcing other agents that can handle some of the clients that we want to get into this, but that frankly, it's not a profitable use of Vance or I's time. And I'm not saying that with any um, arrogance or pompousness. I'm just saying it as a necessary fact, right? We're not going to step over dollars to pick up pennies, and this is a business. So we are motivated to help people, but Vance and I are going to be consumed by very high net worth uh, um, asset holders and unable to service, you know, thousands of clients that are at a lower tier. So I'm not trying to create a FOMO. I'm just stating the simple facts. And when we're doing everything we can to increase our bandwidth and maintain our absolute excellence with every strategy and structure that we provide, so that there is no distinction between the top or the bottom. But right now, I'm just describing a very real growing pain that we're having. Okay.
Let,
Um,
let me make one statement to follow that up. The reason that this is critical to us is because we've dedicated the part of caring. We're actually going to, instead of try to teach and make you fit into a philosophy, we're going to delve in and set it up the way you want. And we care about each and every single person that, wants to commit that time. We feel an obligation to be able to fulfill that also. So on one end, you guys have to help protect our time. If you set an appointment with us, honor it or let us know well ahead of time, because someone else could use that time if you don't. But it gives us the opportunity. The guys who have already called in and who have taken the time to fill out this 8-year analysis, I have already in the evenings and time gone into those numbers so that I can be somewhat familiar with your numbers, where you guys stand and where we can go. So we care, and Jay cares. And I appreciate my partner because he cares about everything we do.
Thank you, Vance, and that's part, I guess, of the blessing and the curse, because it maintains a high standard of excellence, and we want, client feedback, and we want to make sure that folks are feeling that care, because this is very, very private uh, information. This is very, very detailed information that we should all hold close to our chest. Just as a little backdrop for this, the economic thought from a macroscopic perspective with IBC and private banking strategies is this. If 30 million people in our country actually had private banks and utilizing the IBC strategy, that in an economic collapse in America, our country would actually not fail because of that 10% rule, or let's call it plus or minus 10% actually utilizing the private banking strategy. And if you want to dive down into that and get into why that thought exists, we have some folks that are not partners, they're affiliates in the IBC, and they're economists and CPAs, and they put out a lot of articles about that type of thought, and we'd be glad to share those with you. It also wanted to establish that for those folks that are kind of on the fence, we're throwing a lot at you. We're not laying a ton of foundation because we don't have time for that. So if you're saying, well, you guys are making a lot of claims, you're making representations, this is new, we're assembling a body of evidence, I would call it, because what I have tasked Vance to do with me coming in and auditing everything from a lawyer's perspective is that, oh, here's a claim, here's a claim, here's a claim. We want a in-depth proof for every claim that we make, so that you can see it like a court case and evidence. And so for those people in that arena that wanting to really drill down, and we're creating that database. But that's one group of people. There's other group of people like, just sign me up, let's get going. And wherever you're at, we can help nurture you into the place where I think you'll agree that private banking strategies is a superior way to conduct your finances, hands down.
Hey, Seth, let me ask you a question right there, if you don't mind.
Sure.
When you're, as a lawyer, when you're sitting down with a client, whether you're doing a real estate acquisition, whether you're doing asset protection, what do you charge per hour? May I ask that question? Like, do you have a general charge per hour? Is there a general number?
Generally, it's $500 an hour. But frankly, Jay, that is also getting um, dwarfed by the type of volume that we're doing in private banking strategies. But it's $500 an hour.
Yeah. So the reason I ask that is because I think that people need to be reminded that Seth and Vance both have, if you, when you guys call in to speak with them about the process and getting started, they set up a code with us. What was the code, guys? Was it Binge Team?
Binge team.
Binge Team. If you or your family uses that code when you call in, if you don't, you're going to get the same exemplary service, but you're going to pay considerably for some of the services that you will not pay for by using the Binge Team code. For example, you could go out here today and spend $8,000-9,000 on an islet, or through this process and using your code, you may could get that in the $4,000 to $5,000 range, depending on what kind of structure you need. So there's some variables there. But the point is that Seth is willing to sit there and talk with you on the phone and not have a $500 an hour clock running because you're a part of this team. And so again, he's not going to do that if the best use of his time is not with A client, but it's with B client, then you might be talking to one of his associates, okay? But the point is, guys, don't forget to use your code, because as long as they know where you came from, I mean, on this forum here, they don't know who you are. They don't know your name. So when you call in to talk to them, you need to let them know you're on the Binge Team and you're expecting to get all those benefits that the Binge Team have, which we covered some of them in the boot camp, but there's so many, it's too many to list. We'd have to do our own, we have to do on our own session just on the benefits they came up with for me. But I appreciate what they've done. I thank you both for that. And I just felt like that while you're talking about things from a perspective of being a lawyer, that's very important to mention.
It's
Let me,
true, Jay, and that's exactly part of the value that I think that we bring as a team, Vance and I, is that I'm thinking through things from an asset protection structure, how to keep things private, and for everybody on the call, Jay is an expert at privacy, and I'm actually engaged in a process of learning some of the things he's done, and I'm floored, frankly, at some of the tools that he's utilizing completely legally to maintain absolute privacy and virtual untraceability. That can be integrated into our strategies. You're not going to get that with every kid on the block doing IBC. You're not going to get the asset protection that I provide with Vance with every kid on the block in IBC. If you want the proof of why IBC works, why it's better than investment in the stock market, why IRAs fail, we have a competitor who is an expert at marketing. She is incredibly valuable as a resource for us and other people in the IBC realm. She's got tons of proof on exactly everything that I'm talking about. That private banking strategies and IBC outperform all of these other asset classes, and that as in a retirement capacity, it outperforms. We're not trying to do that. We're trying to do something much more focused and rifled down. You can find out all the information that we're talking about and prove these things to yourself. But what we're providing is a comprehensive privacy and asset protection and tax-free growth plan.
Absolutely.
so let me just pick up on that. So one of the things we're going to ask you to do is put your thinking cap on, because in order to learn this, we have to think. Wasn't it Mark Twain who said only a few people actually think? Some of the people think they think, and most of the people would rather die than think. So we've all separated ourselves from the herd mentality. We know that the common thinking out there does not win. It's really a failing strategy. So IBC is something that is personal. That's why we keep mentioning this is private, guys. And it's infinite means it goes virtually any way you want it to go. The second thing we need is what's called imagination. And you'll read that and get that in the books. There's several principles in here that we'll take a look at. And so we're going to go down a little bit of a journey, and we're going to have fun doing it. Our brain wants to kick in and say, oh gosh, this is something new, and it's going to be complicated. And you have to tell your brain, no, it's not. It's simple. As far as I know, I'm probably one of the most complicated IBCers out there. I actually run 5 separate companies on the infinite banking concept. This is cash flowing in and out, and the bookkeeping and all that goes along with it. And people probably don't believe me that it takes less than 30 minutes a month to be able to run IBC and get the money back. And we're going to show you, we're going to talk to you about how to get 100% of your monthly expenses back. If the banks always get the money back, no matter what, all they're doing is running a strategy to be able to get the money back. If they can do it, anybody can do it, as long as they have the knowledge. So I just want to share that with you as well.
Amen. Well, before we jump into questions, I just want to throw a couple quick illustrations out here. And actually, I just noticed looking through the attendees here, one of our good friends, John J. Singleton, is here. Thank you, John, for being here this morning. I know I'd sent you over the link. I didn't know whether you'd actually be here or not, but he's got a couple things he'd like to say. So I'm going to bring him on in a minute. But anyway, a couple of real quick illustrations for some of you that are brand new and you haven't had the foundation laid. I just want to throw out an example to you, maybe 2, and I'm going to take less than 5 minutes to do it. The first example is this. In the banking world, they use IBC every single day. And let me explain to you how they do it. And as I'm explaining it to you, let your imagination run wild a little bit. Put yourself in the position of the bank and how they're doing this, and maybe make the correlation with your own business. A lot of you here have your own business. You have 1 employee, you have 5 employees. Some of you have 100 employees. I know because I've spoken with you. So what the bank will do is they'll hire, say, a big bank executive who they're planning on trying to keep in their bank for, let's say, 15, 20, 30 years. And they'll throw a plan out on the table that says, hey, after you go through your preliminary time with us, be that a year, 2 years, and you've decided this is where you want to make a career out of it, then what happens is they crank up an infinity banking concept contract on that person. So what they do is they take a policy out on that employee. And now what they do is they pay in whatever it is they have to pay in every single year, paying into that policy. This is the bank paying in. And what they've made an agreement with the banker is, somewhere down the road, you're going to retire. And when you do, we're going to cut you a retirement check for, let's just throw a round number out there, $700,000. And that's fabulous. And that guy's excited. And now he's working for his $700,000 one-time payout, right? So, and they can do this through the process and it be completely tax-free to the banker. Okay, so he's getting a windfall that can be through the process, depending on how they structure it. That's where Seth and Vance come in. And you can do that tax-free. Okay, now what happens later after that? That guy retires, he gets his big time check, he goes off and plays golf every Wednesday. Meanwhile, the bank still owns this policy on ABC Banker. At some point down the road, ABC Banker, he's going to jump planets and he's going to fall off this planet. And when he does, the bank, the long-standing bank, gets to cash in on that policy because they own the contract, even though it was on him. And not only do they get their 700 grand back, not only do they get back all the money they paid into this policy through IBC, but they get a big, huge profit on top of that. And so here they've gone and had this long-term investment of 20, 30, 40 years into this person, and that person's given them blood, sweat, and tears in his position, and they're making money on it all the way. So use your imagination a little bit and understand, if you're running a business with employees that have been with you already 2, 3 years, and you might look at one of those. I used to have employees that I looked at and I said, they're unreplaceable. Those are the kind of people I want to run a policy on. I want to have a banking strategy. And guess what? Along the way, we didn't even mention the fact that if the bank wanted to make a disposition somewhere, they could have borrowed against that policy. That policy's been making money every year, guaranteed for all those years. And while it was making money, they could have grabbed blocks of money out of it and put it to use over here at 7, 8, 9, 12, 15, 18%. And the whole thing grew into a monster. And down the road, they're cashing in a massive, massive policy. Okay. But I think the one thing we don't want to forget here is exactly what Vance started with, and that is becoming your own banker. My idea in getting involved here is that in very short order, I will no longer ever need the bank again. And between crypto and this product, to not need the bank, that gets me very, very excited. To not need the bank. I can be my own banker. I can access my own money. I never get denied. I never have a bail-in. I never have any of those things. So anyway, guys, let's go ahead with your questions. There's already a couple in here. Seth, Vance, is that okay if we move forward with that?
Sure. Yeah, I was just going to add very quickly, maybe 30 seconds or less. That was exactly what you were referring to on in the initial part of the call. You said Wells Fargo increased their cash value assets in private banking from 3 billion to 18 billion. That's how they did it. How you just described that. And then I also wanted to make one comment. Some of the audience are foreign nationals. They're not U.S. citizens. We have strategies to create a business interest in the States for foreign nationals who can be insured as a key man policy in that business and create the same banking strategy, just with a little different means. So that's a
structure.
Yeah, exactly.
Yeah. Well, guys, I'm going to see if I can round up John Jay here. It looks like he might be on a phone, but let me see if I can connect him to the audio. John, are you there, buddy?
Yes, I am.
Hey, man, I got you. Good morning, brother.
Morning. Thanks for bringing me on.
Man, absolutely. I just happened to I was scrolling down through the questions and I said, John J. Singleton, is this a joke? Man, I appreciate you showing up today and listening to this. I know you've expressed some interest in learning about this. I've been sharing with you some of the past stuff as well as today. Tell these guys what you're thinking about this.
You must have it. You got to have it. There's no better way to manage risk. I've known about this for a long time. I just never really had occasion to use it because I've had other tools, but this is fantastic if you're dealing with tens of millions of dollars.
Yeah, it is. I know you, whenever I decided to kind of start investigating this with Seth, you were so kind to come on a phone call with me and, help put two brains together, because I don't mind being transparent with people here. I had the guy who had approached me about this years ago. It had a network marketing arm attached to their group. And so when Seth started talking with me about it, I was bubbling with a little bit of excitement, but on the outside I was going, I don't want to bring network marketing on a product like that to the group.
Yeah.
I need something really, really cutting edge, right? Mm-hmm. And so we kind of investigated a little bit together, you and I appreciate that, because I think we talked for a good hour after we had that first initial call with Seth, and man, you brought up a ton of great data that I wouldn't have thought of. So just to have two brains doing that was really good.
Yeah, the other day I was talking with a client, and she's been a client for years, and it was just funny how she said this. She just said, I keep buying cars because I don't know what else to do. And I said, what are you talking about? She said, well, I really make a lot of money and I have all this cash and I don't know where to put it. And so now with cryptos, and lots of people are going to make a lot of money with them, I have a list of people that just would definitely, need to have something like this.
Yeah.
I just want to be able to, send them over there.
Yeah, there's too many attributes that someone who's in crypto needs here. I mean, so for me, and you and I have talked about this, to be able to liquidate crypto in an environment, and I'm talking about Caleb and Brown, in an environment where that entity is not turning around and sending all kinds of paperwork to anybody at the United States level, okay? To be able to liquidate there into a trust and then go from that trust to, say, maybe a trust that Seth sets up for us, which for most people will create a complete tax-free environment, okay? And then be able to put it into, not all your money. I mean, if I could put all my money in this, I probably still wouldn't, but I'd put a lot bigger percentage. The reality is that it just takes a little time. If you want to get $25 million in this, where you're guaranteed, say, 5 to 7% passive incomes coming in, and it's guaranteed to never go backwards. If you want to do that, that takes you just a little bit of time, right? So that's why I say, if I could, I'd put more in. But my goodness, I'm not 30 anymore. I'm getting close to 50. So, time is of the essence. But the point is that to be able to do that whole line from tax, come out of crypto, don't pay any tax because it goes into a pass-through instrument, go from one pass-through instrument to another pass-through, then go into a contract with IBC structured the way it needs to be structured by Seth and Vance, and then watch that money grow, and then take it from there, growing tax-free, pass it on to heirs tax-free, all those things. I mean, this, to me, again, I can't find another vehicle that'll do this.
And outside the banking system.
And outside the banking system. So I don't have to worry about, in 2020, they decided they were going to do a bail-in in July, and all of a sudden everybody's money's being bailed in on, and mine's over here protected with entities that have been around 200 plus years. So yeah, I was very excited about it.
Let me just add for a moment. I was on a call with another attorney yesterday on behalf of a client who is a very successful client. They're on projection to do $500,000 a month with very little overhead. I mean, that's a lot to many on the call, and maybe on some on the calls it's not. But he's doing very well, and I've known him for 30 years, and I've explained to him his need for asset protection services, and he knows that. He's a busy guy, but never implemented it. And he has actually implemented his private banking strategies, and he's got a significant amount of cash in that system, but not enough, and not as much as he could be doing. Well, he got sued, and he got sued with none of the asset protection strategies that I'd been suggesting for him to use for 3 years. And once you're sued, it's a little too late. You've got to have these things in place before they're set up. One of the brilliant things about your IBC and private banking strategies is it is statutorily legislated to be creditor proof in numerous states. Most of them are southern, like Texas, Florida, Oklahoma, Virginia, North Carolina, and others. And other states are absolutely communistic and will try to take estate value at very lower thresholds than the federal government will, and are much more aggressive. So there's a list of states of where to reside, and I know that John Jay has a pretty robust detail and opinions about states, and we've collaborated some on that. But for the purposes of protecting your cash value in a private banking strategy, there's no greater protection than the legislature who said this is exempted. So in Texas, for example, I can have $100 million in cash value in my private banking system and go out there and create a $300 million liability, and I'm judgment proof. That's brilliant. You can't do that with offshore trusts. You can't do that with any other system or mechanism. And guess what? It's free.
Yeah. And when it's a matter of law, then everyone knows it. They know based on your residency. So who's going to initiate litigation? You can even avoid that situation.
Exactly. You can declare it. You could fail to defend yourself. Go ahead, get a judgment.
That's right.
They do. $300 million with punitives and
That's
everything else. And you
Right.
go, and they go, what are your assets? And you go, oh, well, I've only got $100 million in my private bank, but
Yep.
that's exempt. Oh, and I've got my
Yeah.
homestead, but that's
Right.
exempt. So I can't pay you.
Yeah.
Sorry.
Yeah, and when there's statutory benefits in a state, which I don't like to rely on too much, but when a client really needs it, I can actually change his residency by filing a declaration of domicile. There's all kinds
Well,
of
there
ways
you
to
go.
establish residency. Yeah, you don't have to move or anything. It's just a piece of paper.
I mean,
Now, the other thing too is that I think Seth also has for folks that are, let's say, not in a southern state. Seth has an asset tool that he uses, and from what I understand, and the vetting process he went through to get to this, that tool's from one of the best. And so, again, when you guys call in and you're talking with them privately, make sure you ask about these things, because these are the things that they can go through. All these things we're talking about today are just on the surface. And when you call in with your specific example, I mean, you may call into them and say, hey, listen, I make a ton of money, but I've got myself in a world of hurt here. I've got too much debt. And they could do for you just like they've done with one of their other clients who's a big income earner as I think the guy was a chiropractor, if I'm not mistaken, and he had hundreds of thousands of dollars worth of debt from college kids, all the above. That kid thing can be expensive, and they put him on a program using the exact same money he had through IBC. And what was it, Vance? 5-6 years he's out of debt. 7 years he's completely out of debt using the exact same money he had. Is that not right? Plus he now went to having a net worth of somewhere around $1 million. Is that close?
yeah, these guys
Yeah.
came in crying. His wife was worried that the only question she had was, do we have to pull our boys out of Michigan State University? And my question was, how long do you think it'll take you to get out of debt? He says, we're never getting out of debt. We have over 16% in interest going against us, and all I can afford now that I can go back to work is $20,000 a year. So I asked him, okay, well, let me tell you, I can tell you today, if nothing changes, how fast you'll get out of work. Well, the long and short of the story is this man and his wife got completely out of debt in 57 months. That's a 5-7.
Wow.
That's all it took.
And they thought they would die in debt.
Yes, guys, what we don't understand, it's like a jet engine. If there's 3,200 pounds of thrust per square inch, we can't comprehend that. When it comes to money and being able to touch the same dollars over and over again, but each time get a dollar's value, and instead of giving it to someone else, putting it in our bank, that power is unbelievable. So, Jay, my question, you made a comment is, whose bank would you rather put the money in? If you own your own bank and you get the profits and the benefits, are you going to put your money in someone else's bank and let them get the profits and the benefits and risk not getting it back? So it isn't a matter, and it's not really a choice. If you'll know how to do it, the best question, and the theme at the think tank the other day was, if you know exactly what the problem is, you'll know how to solve it. What we do here is we set up a special contract that allows you to do what you need to do. And here comes the caution I've got. We're all entrepreneurs. We're all out there thinking. Guys, beware. There's a lot of IBC pornography out there. People who are using something or an idea or this concept to sell a product. And there are products out there inappropriate, but yet they're saying, hey, oh yeah, this will work for IBC. Yeah, you know, this product works fine for IBC. They're not going to teach you anything in IBC. They're selling products. There's a few good, you know, agencies out there like us, yes, but the majority have just caught on to, hey, here's a way to sell more business. And half of my time, or it used to be half of my time, was trying to correct those problems when people would come in. There's a product out there they think they can use, and it's just devastating. So beware. Learn what you need to do. If for some reason, you know, you don't like Seth, you can come to me. If you don't like me, you can go to Seth. Or find out what the basics are and what type of contract we're talking about. And that's what we have to use, because it forms the perfect bank. It gives us all the identity protection. It gives us all the assurance. Want to go through one more thing. Jay had mentioned this, and so did Seth. In our book, we give you an illustration about compounding interest. Seth, would you relate when I tried to put that into the book, the story on compounding interest, about compounding 1 penny to us?
Sure. Yeah, go ahead. Have a laugh at my expense, Vance. So Vance said, he said, you know, a penny doubled every day for 30 days turns into $5 million. And so I'm sitting there and I start doing the math in my head, and I get to, like, you know, a few $100s, but it's like day 15, day 16. I said, Vance, there's no way we're getting to 5 million. He's like, you haven't finished the math. And I'm like, okay. So I finished the math, and I was really stunned. And some of you are probably laughing because it's a pretty common fact that, you know, compounding 100% for 30 days, a penny will do that. So yeah, my eyes were open. I'm like, wow, compounding is where everything needs to be.
Yeah. So here's the point. It's not so much about what we don't know about money that's hurting us. It's what we think we know about money that's incorrect. One of the things that we're going to lay in your lap is the strategy of always getting uninterrupted compound interest for the rest of your life, and then carry it over multi-generational. You never have to interrupt the compounding once you get it into your banking system.
That's a beautiful thing.
It's huge. That's only one benefit. Jay, you mentioned the banks. The banks are so big into IBC. They get to do so many different things privately. They don't have to go through audits. They use all that cash value in what's called an A tier level of lending, which gives them a preferred rating. It's just incredible. So IBC has always been around, but it was the banks who eradicated the knowledge out of our education system that we want to bring back.
And all those things they're using and participating in, those are the things you've learned over the years working with Nelson Nash of how to instruct, let's just say, you know, the folks here on this call.
I always had thought and traveled the country and spent hundreds of thousands of dollars in education trying to find something like this. And we got very, very close, and we called it double wrapping, but we used a product that was market related, and it had risk.
A lot of risk if it's market related.
Absolutely. And then all of a sudden, one of my clients came into my office and, Vance, I want you to read this book because it seems like this has the answer to what you're trying to do. And it was Nelson Nash's book. And he brought that in, and then you can read my story. I started reading that, and that book screwed up my life to this point. I could never function into the securities business anymore, knowing that, hey, this strategy's out there and you never need to take a risk. If there's time, I'll walk you through an illustration on banker's mentality, and it will blow you away.
Yeah. Hey, John Jay, let me ask you something. John, if you don't mind, first of all, I'll get you in touch with Seth and Vance, and
Okay.
you get a way where you can. I know you've been after me now for a number of months to get these guys where they'll let you endorse their program to your clients, because you have clients that are not in crypto, you have clients that are in all kinds of
Right.
businesses, and you have tons of clients in crypto as well. Um,
Right.
but the point is the product works good for all those people. When you've got a lot of money coming in and you're looking for a safe haven for that money. I mean, my big thing is this. I don't want to sit here all these years in crypto, and then when I go to taking my money out of crypto, the banks are stealing it from me. That's probably my biggest thing, is that
Right.
I mean, and I see over these last 5, 6, 7 years how they keep adjusting the Dodd-Frank Act. And I think that they're absolutely setting up for an event here in the States. This is just my opinion, that looks a lot like it did over in what was it, over in Europe, when they bailed in on the customers over there. And so anyway, I'll get you in touch with these guys where you can do that. And that's what I mean to everybody here in this group. This product, this team of people, talking about Seth and Vance and the team they have behind the scenes, is fixing to be overrun with business. And I'm just telling you guys, you've had months now, and you've probably got just a few weeks left before they get overrun, because this is the kind of product that needs to serve, just like you have people out there with a channel on YouTube, or let's just take John Jay. You have someone like John Jay who's out here going, look, I'm dedicating my life to helping people combat all this crap that comes against them from the system. And so he doesn't care. He's not biased. He does not care. He says, come one, come all, I'll help you. And, you know, John Jay, I've watched John Jay from behind the scenes. I've watched him out in front. And you know what? He gives away more of his time for free than probably what he charges for to help people. And so what I'm saying to you is I feel the same way about this product. It needs to be in the hands of the people fixing to get big, huge windfalls in crypto. So John, I'm going to leave your mic unmuted. And if you want to jump in here for as long as you can stay is fine. If you got to go, just take off, no problem. I'll see that you go. But like, I just want you to, with me right here, there's the very first question someone asks is they say, well, what if you only have $10,000 to $20,000 invested in crypto? And you know, my statement to that is you got 20 grand in crypto, it's about to be $500,000. And if it's going to be $500,000 and crypto is going to go for another 10 years, if you play your cards right, your initial investment can ultimately be millions and millions of dollars. But along the way, even someone like that can get involved in IBC and start a policy where maybe they're not putting millions in, they're putting in tens of thousands. I mean, this is what I'm talking about is correct, right, Seth, and right, Vance?
Yep.
Correct.
Yeah.
Correct.
John Jay, is that okay?
Yeah, that's perfect. I just see it as a way to manage risk, and just with regular cash flow, you can manage risk.
Yeah.
You don't need to have $10 million.
That's
All right,
right. And let me add just for a second. Part of this is it's a change in mentality. It's a change in paradigm. It's a change in how you relate to money. And you're going to capture all of the expenses that you've been otherwise losing. You're not going to finance with a bank anymore when you get to that place. So we're reforming a whole thought process, and that should be started now. And if you got 10,000, then you should start now. And you start to learn the process so that when you actually are dealing with larger values, that you have the wisdom and the ability to steward that properly. That's my answer to when you should get in, you know, because I'm learning. I'm an expert with Vance, but I have immersed myself in the last 3 to 4 years. But I learn every day, every week, every new transaction. It's like this. It's like a martial artist. Okay, I've trained in the martial arts for a long time. In you know, Brazilian jiu-jitsu, you keep getting better and better. I was good before, but I keep getting better and better. And it's the same thing with this. We're going to get better and better. You're going to get better and better. When should you enter your jiu-jitsu class, for example? Well, now, when you want to get started. Same thing here. Start learning. You
Yeah,
need
that's
it.
perfect. And I want to make you feel better about your earlier conversation with Vance when he said, you know, a penny a day doubled is this much money. So there was a time in my life where I traveled all over the world and I did, you know, I would do a conference on a Tuesday night and on a Thursday night, and usually it was in a different city, sometimes in a different country, and I was the keynote speaker. And when I hit the stage, this was always one of my questions to the audience, which was, would you rather have, if right now I was willing to write you a check for $1 million, would you rather have that $1 million, or would you rather have a penny a day doubled for 30 days? And can I tell you that 98+% of all those people, sometimes I had crowds as big as 1,000, 1,500 people. Can I tell you that those people, 98% of them all wanted the $1 million right now?
that still doesn't make me feel any better, but
It doesn't make me feel good, man. That's a lot of people thinking the same way you were. All right, so there's not a lot of questions, guys. If you have questions, put them in here, but I'm gonna get started on these and we'll run through them quickly. We are currently 1 hour and 17 minutes. We're gonna do another 15 minutes here and we're out.
Yeah.
So this person says, this is not a question. This person just says, I agree with everything being said here. I read Nelson's book 5 times. I'm engaged in implementing IBC, but still need and want to learn much more. This is from RB, whoever RB is. Speak a bit more about IBC for Canadians. Seth, Vance, you want to do that? Just lightly about how I think they're trying to say, how can the Canadian get involved is kind of what I think the question is.
I have, I call him my son. His name is Jason Lowe, and he's a Canadian, and he runs a lot of the IBC practitioners program up there. Canadians can do this, but the contracts start off as modified endowments. There's not any room. The government wants tax on all the gain. So in order for a Canadian to do this, and I'm working with one of Jay's clients right now, and he's got himself set up so that he can own an American, a USA life insurance contract. Okay, so it takes a little bit of involvement. So therefore it needs to kind of be worth it for you to do it, because otherwise you take a Canadian contract and so you end up having to pay tax on it. It's still going to let you be the bank. I want to also make an answer on the person who only has $10,000. Let me answer that question this way. You have money that you have to pay expenses for every single month. I know that. If this system goes in and you start practicing the system, what if you get back 100% of your monthly outflow every single month and add interest to it? See, in the IBC, and to answer both of these two questions, Nelson explains, we all explain that you finance every single thing you buy. So why don't you be the bank and finance it yourself and reap the rewards instead of letting somebody get all your money, your hard-earned money, flowing back to them? Once you convert that, once we see that, hey, this is simple, now this car payment, instead of going away from us, what if that car payment actually came into our company? The good and the bad is we still have to make the payment. But what if it came to the company we own? What about the credit card debt? You know, we're paying some credit card debt or a student loan or a mortgage on a house. That money's going away from us. What if it was actually being paid, but it came to our company, our bank system? That's how fast, you know, it's called exponential compounding. It's where compound compounds, and it's unbelievable. It's hard to comprehend. So,
Hey, John Jay, can you think of any ways for a Canadian to participate in this
Yes.
on U.S. soil?
Absolutely, because I believe you can have a policy owner that's a resident, company, trust. Can it be a policy owner be a person or a company, right?
Yeah, it can be a
Absolutely.
trust, right?
Yeah.
Yeah, so you can easily set up a company anywhere, make it the owner of the policy, and then whoever the beneficiary of the policy can be anyone on the planet. Whoever has control, right? Whoever has control of the entity.
It also has the premium also has to be paid out of a U.S. account.
That's easy to set up. So it wouldn't even matter about your nationality if you set it up properly.
Right.
Yeah.
Yeah, John Jay, you're perfect for this, dude.
That's what I was first thinking when you were talking about that. I was like, oh, that's easy. Canada. Yeah, that's easy. No problem.
Yeah, you know all this stuff that
That just might be the answer here, guys. If the foreign people, if we, John Jay, if you've got that expertise to help these people set that up, that's the first step. That might be the very first answer.
Yeah.
So that
Sure.
These contracts, they only have to contract law. Now, I'm not an attorney, but I know inside and out the life insurance contract laws. They all have to come into existence at the time of issue. The whole thing, a partnership, insurable interest could fade away on day 2. That does not void the contract as long as it's all the requirements are met at the time of issue.
nice. I
Can
like
you
how
do this with? Yeah. What if you had an existing company that's like a year old? Can you use it?
Say that again.
If I had an existing company that I've been using for a year, like an LLC or a trust or something.
That's fine.
Yeah.
As long.
Yeah. Okay.
And so the bottom line is, if the insurance company will accept it, they are under some scrutiny. Country treaties between the two, everybody. And so they have their own requirements. And as long as we meet those, but once we find out what they are, if there's someone trying to get it, then we just solve those issues.
Yeah. Yeah, we can do that. I know we can do that. I don't even know what they are, but I know we can do that.
Correct.
Pretty much. Yeah. So, I mean, so what I'm thinking is a lot of people that are using LLCs right now to manage their portfolio can actually probably use that same LLC in one of their contracts just to start out.
Let me
get more sophisticated.
Kind of to a broad step. The mentor, one of the mentors who trained me, today he's still alive, but I understand he's terminally ill. He's 80 years old today. Has 153 policies that he owns. IBC is a system, and it's multi-generational. And he has had to create, partnerships to be able to put the growth of the money in. But I'm just telling you that some of these guys have taken it as far as they possibly can from the time Nelson Nash introduced it about 35 years ago. So it's limitless. That's why it's infinite.
Okay. Very good.
All right, let's jump into these questions so we can get through this. I don't want to keep you guys too long, or the folks here. They were on a live stream with us last weekend. How does age affect this? I just turned 68 and I am thinking that might be too late, or at least a very different strategy. I think the only person that can answer this is Vance.
And you need to read our book, because I put my story in there. When I read Nelson Nash's book, I became extremely angry that I didn't know this information and had dedicated so much time and money to doing the best thing for our client, when I found out I was just a puppet of the government. And later that night, I became depressed. Where was this 30 years ago? Here I am. And at the time I was 57 years old. I'm too old for this. So I actually called Nelson Nash, and he laughed, and he said, "I'm not laughing at you. I'm laughing with you." He said, Vance, you're going to have exactly the same advantage as anyone else, just not as much time. However, you've got more than enough time to teach this and pass this on to your, immediate family, your kids, your grandkids, or whatever else. And he said, plus, you may be uninsurable. Did you guys know, and you need to understand this, these policies don't have to be on you. They can be on anyone that you have insurable interest on. You own them, you are the beneficiary, and it makes absolutely no difference. As a matter of fact, it should be on grandkids. Grandparents should actually put it on grandkids. Their parents should put it on their grandkids. And whenever the death happens, like Jay just explained with the banks, we get an influx of cash. It's called a windfall, and it goes and fills up, the other policies hoppers if they've got any loans outstanding on them, and it just goes on and on and on. Does that help?
Yeah, that absolutely helps. And Vance, do you mind me? Am I being too personal if I ask your age on the air?
I'm 68 right now.
And have you opened any new policies in, say, the last 3 years?
Yes, I've opened up 3 more. I have 14 policies.
Okay, so in the last year or two, so 65 to 68, you've opened up 3 new policies right away. So that's kind of a good answer to this guy.
But let me say this, Jay, they weren't on me.
Overall, exactly. You just needed a place to be able to work from, so you found someone you had an insurable interest on, you opened it.
I don't know if any of you out there have kids who think they're smarter than you are. I do. And I just bypass the kids. I go straight to the grandkids, and I start financing things with the grandkids. I start teaching them this concept right off the bat. It's beautiful. It's so basic, and it's the answer to what we don't have out there.
Yeah, it's great. So here's a question I'll answer quickly. It says, can we set up IBC strategy to pay in and out with a stable coin? Not at this time. Is there a max age limit to get involved? Well, because of what Vance just said, and I'm just bulleting a couple of these, there is no max age limit because, again, you may be getting that policy with your grandchild.
We just did one at age 87.
Yeah. So the reality here is that, and this is something that Vance explained to me, and I went, oh, now I get it. And that is if you take out a contract, let's say on your grandchild let's just say your grandchild's 20, okay? And you take out a contract on that grandchild, you are the owner and first in line on that contract, always. Now, the death benefit of that contract is only ever paid out if something happened to the grandchild, and maybe you were alive, maybe you weren't. But you get to use that contract as your own bank the whole time you're alive and pass that along completely tax-free to the next people in line.
Exactly.
Is this applicable in the UK, and is there a local contact in the UK? I would tell you that you want to contact Vance and Seth and let them connect you with who they need to, and maybe, again, they need to have an hour-long conversation with John Jay about some potential creative strategies that'll help someone, whether you're UK, Australia, New Zealand, whatever happens to be. Is that a fair answer, gentlemen?
Yes.
I'm drowning in debt, able to make payments, but maxed out. Been waiting for cryptos. I hadn't got started yet. I'm filling out your form now. And I have a program with a competitor, and they do not have the imagination you have to run monthly expenses through, simply to borrow to pay debt. Look forward to working with your company and for cryptos to moon. Absolutely. Yeah, that's fabulous. So more of a statement there. I listened to the fall webinar with Seth and Vance and read their book and part of Nelson's. I'm 60, married, no children, only a 21-year-old niece. I had colon cancer twice in the last 25 years. father and his father died by 70. I'm doing everything I can to stay healthy longer. Jay touched on my concern earlier. It takes some time to get the IBC up and running, and I am not sure how much time I have left on this beautiful planet. I'm just looking to see who this is. I will have about 1.5 million in windfall by mid-year, another 4.5 million by end of year, then follow Binge Team roadmap. I will use my windfall to travel and enjoy life. How can I integrate the IBC into my portfolio?
You start today. You have every opportunity that I have, but you start learning about it today. There will be an angle, an idea, a precept that you will catch hold of. Where do you want the money to go? It'll be based on what you want to do. You don't have to fit it. It will fit you.
Yeah, it's kind of like the last person said, you got to really, I would just take the time to give these guys a call, because it's like Elizabeth said, they're using their imagination. Okay. And that's one of the things that I love about Seth and Vance is between the two of them. I mean, when I went and spent a few days with them in Texas, it was a constant kind of bouncing of ideas back and forth off of each other's brains, and I watched that synergy take place, and that's what you get with these guys. So I think that'll be fabulous. Just a couple more questions here. Okay, so I'm just taking a look here. Okay, can you use existing variable life insurance instead of a whole life insurance? And what is the difference between the two?
Okay, the short answer is unequivocally no. You want guarantees. Banks do not take risk. Bankers do not take risk. You've got to have a contract that has guarantees. That was the problem with our double wrapping when we didn't know about this concept. We got very, very close. We used a product that was not guaranteed. And when 2000 happened, it was devastating. Well, it was the very first time we had ever suffered for our clients any type of loss whatsoever. Even though we were 50% higher in saving and keeping assets for clients, we still had a loss. And that's the first time we had to deal with it. So absolutely not. There are some products out there that are just flat not guaranteed. Do not get sucked into a universal life or an indexed universal life. They will not work for IBC. It doesn't matter how much you hear on the internet that you can use these products. They have a potential of much greater gain, but when the year comes that there's any loss, it will be devastating and it can never be made up.
Now, some folks here are asking how to contact you guys. Can you guys go through that? Seth, you want to address that quickly?
Sure. Our website is www.privatebankingstrategies, IES at the end, privatebankingstrategies.com, and that will tell you everything you need to know.
There are offers there. The book is there. The contact is there. It automatically comes to us. We start putting that in the system. We contact you, and then we set up an actual one-on-one phone appointment with either me or Seth. That's who you're going to talk to first.
Is a healthy 66-year-old possibly insurable?
Absolutely. Us 66 years old, we're really only 40.
That's
okay.
Right. Hey, 66 is the new 40, baby.
Exactly.
Yeah, we're moving forward in humanity, aren't we? Can I use this on an existing whole life policy I have with Northwest Mutual?
I just got off with a conversation with a new client and a Northwestern Mutual agent, and he surprised me. He says, I am not going to stop my client from switching over to your contract. They have a beautiful contract, except they switched over to a stock mentality. which means they have to keep the money. And so they penalize if you take money out, you do not get the dividend that year unless you've paid the entire loan back. That's not going to work. So yes and no, you still can use it. Some of it is salvageable. We just need to do the numbers. If you know what the problem is, if we can share with you and teach you, you'll decide what you want to do, not us. You're going to decide how much you're going to want to do. You're not going to be looking anymore for advice on what to do with your money. You're going to know what the solution is. You're going to know what to do yourself. If I'm in charge, there's a risk involved. Even though, I love my people, I love my clients, I want to be the honest guy I possibly can, there's still risk involved. The only person looking back at you in the mirror is the only risk attached to this strategy. If you don't trust that person, then this probably won't work.
Yeah, that's so powerful what you just said. This person here says, we have a business. If we open up a policy through the business and God forbid we have a tax audit that we wind up owing a bunch of money, is that money that's in the policy safe from government? So for example, let's say they had a tax levy, for example, and I think that's what they're trying to point out. Let's say they had a big tax burden they couldn't pay, for example, and then the government or the IRS is going to come after them or whatever. Is the money in the IBC protected from that?
That's definitely a legal question, and depending on state.
Yeah, let me jump into that if I could just for a second.
Yeah.
I mean, I think that there's a formal answer, and then there's an answer in reality. And I would say that the argument would be made, no, they can't. But look at our friend, or maybe he's not our friend, who knows, depending on the narrative, Reggie Middleton. Do you think that the ABC entities asked for permission for anything that they did? No, they just railroaded him and took all his money and basically said, you're going to play or you're going to jail forever. That's what I estimate. I mean, I'm not on the inside. Maybe John Jay can comment. Maybe you can comment, Jay, but there's a real answer and then there's like a legal answer, I think. I think that we can make an argument that no, they couldn't. But in reality, if you're making enough waves in the pond, I think, you're at risk.
Yeah, the federal government might be able to do, attach it in the state of Texas. These things are lawsuit proof and creditor proof, but are they federal government proof? Number one, they have to find the money. They'd have to find that contract. That contract is not on public record anywhere. And then they would have to get some sort of judgment because the insurance company will not release the money to anyone, including the federal government, unless they've got a mandate to do so.
And let me ask you this, Seth, from a legal perspective, because this is what comes right into my mind, is if let's just say I have ABC Corporation over here, or ABC Business with my personal name attached to it, and that entity owes some tax. But over here, I have a structure set up that you've shared with me that goes through a trust, and that trust now owns a IBC policy. The two are separate, are they not?
Yeah, they are, and that's exactly what I was going to follow up with. Is that there are other structures which you create, which you don't own the asset.
Yeah, if you don't own it, you can't come after that asset if I don't own it.
Right, government can't come take that asset from you if you don't own it, and that's part of the privacy cloak. You're not even going to declare it, and maybe they're not going to discover it. But if your fingerprints are on it, and like I said, there's some type of intimidation factor. I mean, I didn't get any feedback or comment from either one of you guys on that, but that's my opinion, and only my opinion, that if you become a target of the federal government, then it's, there's no rule of law that really applies.
Yeah, so moral of the story is don't become a target.
Don't be telling, or yeah, have your Learjet ready and waiting.
Right.
And then try to figure out where that thing could land. This person says, what parameters make someone uninsurable? I'm almost 50 with no spouse, no kids, etc., and I'm in perfect health. How is it determined what maximums are for investment with this?
Oh, that's the part that we go through in discovery as we teach. We automatically start soliciting multiple insurance companies to see what they're willing to offer, so that all that is part of the discovery for you to be able to make a decision. So once you have that information, once you know how to work the IBC strategy, you're going to solve your own problem. But there's not, you're in perfect health, so you would qualify for the amount that you could possibly qualify would be based on net worth, income, those types of things. And we have strategies here to multiply that, using a factor of multiple companies.
Yeah. Now here's one that I think I'll take, and then you guys can follow up with it. And if nothing else pops in, we'll wrap it up because this is the last one. This person says, what is the approximate cost to start a strategy? And that real answer is, and I want to add something to that because it brings something to mind, is how big of a bank do you want to start? So in other words, when you go through your discovery process with Vance and with Seth, they're going to help you decide, here's what the proper size bank for you would be. Here's like option A, option B, option C. You choose, we'll help you. But here's something I want to point out to folks, okay? So for me, I've been looking at the strategy of, let's say for the first 4 to 6 years, I'm putting in $5 million a year. All right. And what I realize is that in that process, there's a certain amount of that 5 million that gets eaten up in the very, very heavy cost of a very big life insurance policy. Okay. So it's going to take me till about year 6 or 7, roughly, to get back to my full cash value. Okay. Now, I'm okay with that because in doing that, on that $25 million, I did not give away 40 to 50% of it to the IRS that I will never see it again. So I want you guys to make sure you understand the difference between cost and opportunity cost. It's totally different. And so I think, I'm kind of going a little bit overboard on the question here, but it brought up something to mind. And that was when I started thinking about the fact that, gee, I'm going to put 5 million in on year 1 and 5 million on year 2 and 5 million on year 3 and blah, blah, blah. It's going to take me, because of the cost of insurance, it's going to take me till about year 6 or 7 roughly to get to where my cash value is the full 25 million. So if I went backwards, let's say over that time period, 5 million, $6 million out of that 25 million, that was still far better. And I actually got a value for it. It's called the insurance policy, which makes my wife feel good. It's far better than me taking that money out of crypto and going over here and putting it in my personal checking account, and then an alphabet group coming along and telling me, hey, you owe us 50% of that. So the idea of putting it here where I have this value that I'm paying for, plus by the time I get done putting money in, and now the policy kind of runs itself without me having to continue to add money, add money, add money, add money, I'm at a place where I've gotten my full cash value back, and now it's all growth from there. All growth from there. And I'm probably leaving something out I hadn't thought of, Vance. If I did, please share.
Yes, Jay, there's going to be some discovery for you here. What you just described is if you put a premium into a policy and do not practice banking.
Right.
Here's what you're going to find out. In the first 4 years, the amount of premium versus banking power you have will have doubled. So you're controlling twice as much money.
I love these guys.
Okay, so let me give you a really good example, the best way to explain this so everybody understands it. If you and I were to go into business, we did all the work. We decided what that advantage was, that opportunity was, and we decided we were going to commit. So we did our financials, and we decided that it would take $100,000 to operate our company for the first year and keep the doors open. We could do all that we needed to do. How long does it take a startup company to usually make a profit?
5 years.
Usually, yeah, that's the medium, 3 to 7 years. 5 years is right dead on for the average. Would you say we would be pretty profitable after we put that $100,000 in if we could turn around and pull right back out and put to work 60% or $60,000?
Yeah.
We have a pretty good first year. Now the next year we put $100,000 in, we pull out $75,000. Are we headed in the right direction?
Yeah.
And the third year, 85% or 85, and then the fourth year, if we can't break, dollar for dollar, we're really close, about 95%. Then
So about the fifth year, you're at $1.20.
Yeah, and the fifth year, every dollar we decide to put back into our business, it immediately grows by $1.20. How many of those business scenarios would you guys like?
Plenty.
So if I had an investment that in the fifth year, every dollar you put in, it would turn into $1.20. We are turning these contracts into over 100% efficiency in the fifth year. Totally different from what you think about insurance, that it's an expense. We're also going to show, Jay, this. Guys, our goal in our financial software that we're going to show you, the 8-year analysis, is you're only going to come up with a first year's premium. And we're going to use money you're giving away to pay all the future premiums. Is that okay?
Absolutely.
So let me interject for one moment, if I could. Yeah. So with Vance, that's so super valuable what you're describing. But in year 6, 7, 8, and 9, it's not only $1.20, it's increasing. It increases until it plateaus at a certain point. But there's some illustrations that I saw, Vance, that were well over $1.70. So I'm putting in $1 into my bank, and my bank can lend me a multiple of that. That's almost, it's just like printing free money almost. You have if you're putting that money to work, and if you're using that money,
you're printing money out of thin.
Right.
The only thing I want to caution us all about, it is not about life insurance illustration numbers. And it's all about learning how money flows. Jay, I want to give this example, and probably now is the very best time. If your listeners out there have pen and paper, let's go through this. Part of this analogy is in our book, but I want to give you a takeaway on how we have to change our thinking. So let's say,
Vance, before you do that, let's do the last two things here, and then if people need to bail out, they can come back and listen to this example at the end. Someone asks here, can the ownership of a policy change? I'm pretty sure that you can change that. Is that correct?
Yes. Once it goes out of your control, you're done with it.
All right, and then the very last one here says, please tell Vance and Seth that the Binge team are extremely grateful for their valuable time. I just contacted them via their website to kickstart the IBC strategy. So go ahead, Vance, with your example, and then at the end of that, we'll close out, guys.
Okay, guys. So we're going to talk about the flow of money. Most of us, when we talk about mortgages and loans from real banks, 99% of the time, I'm going to state, have the wrong loan. The mortgages that we might have on our homes are not correct. Most countries, Australia, England, and now Canada, forbid these regular amortized loans that we do for mortgages. But let's talk about the flow and why banks lend money. We'll, at the drop of a hat, refinance a loan if we can get 0.25% better in interest rate, thinking that we're going to be paying 3 or instead of 4%. And the laugh is with the industry, with the actual lending companies, is they think they're only paying 4%. And in the first 5 years, they're not even going to get down to 75% interest, and then we'll get them to refinance because we'll change the interest rate again. And we'll stay up into that 90, 80, 75% interest versus principal, thinking that we're only paying. So it's the volume of interest. Let me explain that now. We've got a debt. We owe a student loan, or we owe on a business venture or whatever, $100,000. And we're making payments on that. And those payments happen to be $5,000 a month. And our interest rate, because we were in a hardship situation, the bank is charging us 15% interest. So I hope you've written down those three numbers. The debt, $100,000. The monthly payment, $5,000. The interest rate, 15%. The Vance Low Lending Institution would buy that debt in a heartbeat. And the question is, why? Write your answers down. Go ahead, commit yourself. Think, why would I buy that debt? Why would I take my $100,000 and buy it?
Most people think because it's a high interest rate, but it's really because of the flow of money.
If you set interest rate, give yourself an X. You're wrong. It doesn't even enter the equation other than, yeah, I'm going to get it. The other one is the volume. Let's start looking at the volume. You're going to pay me how much per month? 5,000 times 12 equals $60,000. So I've got $100,000 at work producing $60,000 that first year. If I divide the volume of return by the money at work, that's a 60% return on my money in volume, correct?
Correct.
Is that high enough?
It's high enough.
How long would you like that to last?
I'd like to do that every day.
And for instance, when you get that 60 over that year, or that 5,000, that represents a third touch on your money. Now I've got the 60. I could go put that back to work and buy more debt, right?
Absolutely.
And now I'm going to get, and that's a fourth touch. And when I get that money back, that's a fifth touch. This is how banks do it. It's not about the interest rate, but they want us off on that pageant, on that sector, to avoid the real issue. They're making money on the volume, not the interest rate.
Yeah.
So guys, you can do that right now with your cards. If you took over a car loan, if you took over a credit card debt, do the math and forget about the interest. Find out what the volume is. If I bought that debt, if I've got this money sitting over here, idle, asleep, what if I took it and I bought my debt and I started receiving the payments? How much more could I make on that investment than leaving it at risk with someone else?
Yeah.
All right.
Real quick, before we close this out, Seth, will you send me an email with your website in it, the PDF book? I know they can get it off your website, but let's make it a little easier than that. And contact information so I can post it right into Patreon along with the link for this recording.
Sure will. Absolutely.
Okay, so that'll help everybody get the free book, get the website, get the everything you need, and you can be on your way.
Absolutely.
Seth, Vance, thank you so much. We'll do this again in maybe a month or so and go to another level.
I really enjoyed it, Jay. It was great to meet the guys. The questions are right on track. let's just all take the next step. Let's better ourselves, make ourselves more independent, more private. And I really look forward. I know Seth does, feels the same way. We're really looking forward to new friends and new clients and people and all, working to help solve. And it does, it helps solve a lot of the banking problems in the United States if we don't have to borrow money from the banking system.
Absolutely. Thanks, guys, so much. Seth, thank you for being here, my friend.
Thank you,
Thanks.
Jay.
Thank you.
Appreciate it. Thanks, Vance.
Yeah.
Goodbye, everybody.
Everybody have a super Saturday. Make 2020 your year.